All right. Good afternoon, everybody. Finally, boy, there's sometimes I have no idea why it doesn't work the way I want it to work all the time. But there are some times where, like Phil said previously, the technology, the tech gremlins get in this streaming and drives me insane because I just have to start all over again. It just drives me nuts. But now we're here. Now we're going. So let's go ahead and get started. Let's take a look at Roku. Roku's at the bottom here. You can see it's not. We'll come back to Home Depot in a minute. It's still, I mean, it's not really doing much. It's still below the 8-day moving average, and the MACD and stochastics are both rolling over. So it's looking like we might be starting a new leg down to the downside today. We got this move on last Friday. But we ended up rallying off of the low, and we're still in that range. So I'm not really too. Remember, this is the one I've got the most to gain. Like I've got a lot of flexibility with this because of the reward to risk ratio that we had on it. So I want to see like what it does with this range that it's in today. I know it's a big move down today, but you have to keep in mind this thing moves a lot really quickly. And actually, as much as it's dropped, the maximum gain is still one standard deviation away. So I'm not too concerned about this yet, though 360 is like, just for context, it's like right there. So I'm like I said, I'm hardly too concerned about how this is working out. It's a little bit of a failed breakout there, so that's why more than likely is not going to be. It's going to end up not working out in our favor, but I want to give it a chance to clear this range from Friday, since it was a gap down and then we rallied. We did rally to close the gap and then have failed there. So that's another kind of concern. More than likely, it's not going to work out, but I do want to give it the ability to let those odds that the original trade give it a chance to do its thing, and it's not quite there yet. Again, the worst you can get to is $5. We're at $4, so I have a little bit of breathing room. Not very much, though. So that's that trade. Target, let's take a look at Target. Target is a bear put spread, long put vertical spread. You notice it's been on a bearish convergence lately, and today is rallying back up to the 8-day moving average. The question will be now what it does at the 8-day moving average. Last time I rallied to it, which is a much bigger rally, we rolled off of it. So the max gain is down to 230, so it's down into this area, so we have to really drop down, and it's looking like that's unlikely that it's going to be the case. So we've only lost 247 out of the 500, so I think I'm going to go ahead and take the half, the 50% maximum loss on 50% of my maximum loss on this one, and close out with a small loss. So let's go ahead and put that into our market outlook category there. All right, bull put spread on U.S. Steel. This one has been a big mover yesterday and today. You notice really breaking down to the 50-day moving average today, and that after breaking below the 817 and the 30-day moving averages over here, after not from close to close, but from open to close. So that's really done a number on X. It's not quite to the $4 mark where I have to be too concerned with. It is a bull put spread. If you take a look at, again, how far in the money is too far in the money, well, when the extrinsic value is 12 cents, it's too far in the money. So there's still a chance, still an opportunity to let that 50-day moving average hold for a support level. So I'm going to go ahead and let that one keep going. This is where we're at right now. I'm going to let that keep working to see if it can bounce back up into this territory, because it hasn't met any of the exit rules yet. All right. Tech Resources is one of our more recent trades. It continued higher. It's rolled back down today to the 8-day moving average. And again, now the question is what it will do at the 8-day move. We anticipated that it could. That's why that break even's there. Now the question is, will it bounce off of that and stay up here as bearish as today's move looks like? There's the trade there. There's the reward to risk ratio. So we'll let that one keep playing out as well. Give it time to do its thing. All right, so again, a bull put spread $1.08 would be the number we're looking for on that, and we're not to that point yet. So those are our bigger losers right now in this particular category. Here's a couple smaller losers: a long call option on MGM, long call spread on MGM for October. We're down a little bit there. Maximum gain is still feasible. This is what the chart looks like. We're flirting with the 8-day moving average. We haven't broke it. We've been on a bullish convergence. The question is whether we can stay on a convergence with the MACD dropping below zero and still be above the 8-day moving average, as you can see kind of over here. I'm going to let that one keep going too, as I'm not really down very much. Out of $500, I'm only down $90, so I've got plenty of time to work with there. FCX, another little small loser, iron condor spread. It's not quite in the exact range. A bigger move it to the downside today, but still, it's not like it's between the 50 and the 200-day moving averages. We've been trading between the 50 and the 200-day moving average for quite a long time. So we'd have to really kind of break that 200 to be significant. And at that point, if we break that 200, then I'm going to be flipping this trade to a more directional opportunity. But it doesn't look any different than the last couple of pullbacks to the 200-day moving average yet. So the idea is that we'll stay around that point of control, acting as a center of gravity until it gets some kind of escape velocity to pull away from it. And I don't see that pulling away quite yet. Penn National Gaming, small gain on this one, kind of sitting right at where we got in when you consider the time value. We're still above the 8-day moving average, even with today's little drop. And we're still above that 23% retracement level that we broke up above when we were looking to get into it over here. So I'm still okay to let that one keep going. Don't have any reason to close that trade out. It's also an October expiration. Boeing, iron condor spread for September. This one was closer to gains, but since we've been pulling back down here on the stock, flirting again with, we've been below the 200, and now we have a death cross on Boeing. But we're still got support at this area. We haven't broken below this level where our break even is. So no reason quite yet to get out of the trade, though it is something to keep an eye on because that can flip very quickly now that we're closer to September expiration. So I'll keep my eye on that one for anything. See, nothing's in the money yet, but watch the puts to see if and when they do get in the money. Best Buy, another September expiration, iron condor spread. It's also kind of pulled back down towards the puts after flirting with the calls previously. Now we're flirting with the puts, but you can see again we're not down there yet. We're still nothing's out in the money yet. So we're going to let those puts keep working, let the odds keep working for that one too. Those have had kind of been the biggest two losers here over the last couple of days because of those moves they've been making. Nike's a short call spread on Nike. We're still dropping. It's still looking really good. Like we're not quite the 50% max of maximum loss yet, which would be $225 of a gain. So we're 150, but that's looking great. So we'll let that one keep going, and that's an October expiration. CRM is a bull put spread. That's almost done, and of course we're well off of the puts, and things are looking good on that. Even with the drop, we're well off the puts, so more than likely going to get maximum gain on that spread. So got some September expirations. Only really one of them is done. The other two here, condors, still have some work to do to hold those puts, and you can see some directional trade, one directional trade there and more directional trade there too. That we'll see, how they end up working out. Another U.S. deal would be another one we'd want to see if it bounces off those puts. So it's still got some work to do on a few of those September expirations. Home Depot has been quietly, it's a trade that we have in another class for September expiration, but as you can see, going into October, we don't have to worry about earnings. We're still around a strong volume node. This has been a great iron condor trade since it peaked in mid-May. I like the potential for it to still be. I mean, the MACD and stochastics are relatively neutral. The market forecast, if you take a look at the market forecast here, Home Depot, again, relatively neutral. The MACD, the intermediate and market sentiment, momentum, I mean, very, very neutral patterns here. If you take a look at its RSI and its CCI, you can see how neutral those are. You take a look at the directional movement index, and you see the ADX is reflecting a lack of a directional move. Both lines between 20 and 25. Look at the Ichimoku trend cloud. And very noisy level. We had a little bit of a trend going, but now nothing. We are above the cloud though, so it's a positive sign that we're not going to be dropping off a cliff anytime soon. And take a look at the Bollinger Bands here. Oh, we already did look at the Bollinger Bands, but we are in the middle of the, flirting with the top quartile, but still in the middle of the range, trading around a significant volume node on this level. So very, very neutral pattern still. I've liked doing neutral trades on, there's our iron condor that we had for September. I like doing neutral trades on this. It's been a good one to do it on, so I'm going to do another one. So let's go 315. Actually, I think I already have it up here. 315, 310 on the put side, and then sell the 345, 350 on the call side, depending upon where we get filled in. We'll try for $1.70 here. Going for a full position size. So those break evens, you notice I already have on the chart. So my lower end break even is on the downside there. My upper end's got some room for it to go. So I've got a little bit of risk on both sides, but as long as it stays around this volume node, then we're good. And right now it doesn't look like there's a whole lot of catalysts out there for the market to trend in either direction, one way or the other, especially from a retail market. The high point is set there on that big parabolic move, so that's setting a high point. The low point set on the subsequent parabolic move to the downside, so that's where our low point is set. So as long as we stay in that range that we've really established over the last couple of expiration cycles, including September, then we're good to go. Just trading around that volume node there. So let's go ahead and throw that trade on, see where we get filled in. Into the market outlook category, and we got filled in $1.76, so we're good to go there. So there's our trade idea for today. So as always, thank you all very much for coming on class today. I appreciate your time as always. Have especially with the patience for getting this stupid YouTube stream going. But thanks again for coming on. Have a great rest of your Wednesday. Check out for that market outlook later tonight, and then we'll see everybody in class tomorrow. All right, goodbye, everybody.